Hey everyone, it is Julie here with Tip Ranks. Welcome to our very first episode of Analyze This, where we'll be chatting with some of the smartest minds on Wall Street. Today we had the opportunity and pleasure of talking with Daniel Ives, a managing director and senior equity research analyst at Wedbush. We'll be chatting about current market conditions, the disruptive tech sector, including Tesla, and Dan's advice to investors. So let's check it out.
I still think there's a four-digit stock.
Yeah, absolutely. And I mean, time and time again, they've come up against these headwinds and have continued to impress with their results and numbers. And deliveries were a big thing with the Shanghai plant being shut down. And so we're kind of climbing out of that now. So I think a lot of people, there's a very strong following of Tesla, obviously. So a lot of people feeling optimistic for the future there. On the topic of EVs as well, going back, we had a lot of those SPAC, the new EV companies, but we also have the OEMs, the Fords, the General Motors that are shifting to electric vehicles too. So how do you see that balance playing out? Will some of these newer companies be able to emerge and survive, or will the big traditional companies pivot enough that they'll dominate the markets?
Yeah, and I don't view it as like a zero-sum game. I mean, my view is today, okay, it's 3% in the US, low double digits in China, Europe, it's called 8, 9% in terms of the percent of EVs as autos. But I think now that eventually will trend toward 20, 25% and more as we go into the rest of the decade. So I think there's a massive opportunity, in terms of going after this. I do believe Ford, especially next year, F-150. I think the whole electrification strategy under Farley, I think is ultimately just a bullish strategy in terms of not just a re-rating of the stock, but I think ultimately what they could do at Ford, and obviously F-150 is kind of that's the trophy case. I mean that's really going to be, I think, what's really going to revolutionize EVs, especially as we go on the pickup truck side. Look, GM, everything Mary and team have done. I mean, that's a big part of our bullish thesis on GM. Clearly, there's been a lot of hiccups along the way, but I believe that's another one. I think Detroit is going to play a pivotal role in EVs, but the pure plays too. I mean, the Faradays, look at names like NIO in China and
Mhm.
others. Like, you have 120 automakers globally going after EVs. It's going to be a big benefit, but ultimately, look, the supply chain issues. I mean, that's something like no one could have ever foreseen this level, pushed out those stories. The chip shortage is obviously a clear overhang. And I think, look, that's what makes it so tough for investors to navigate, because you're trying to understand, okay, like on a normalized environment, what do numbers look like? But yet, even names like Rivian, like you can't get the chips, can't make the cars. Do you lose demand? Does demand erode? Then you start to factor in like a recession. Okay, all of a sudden, like a 75, $80,000 car looks a lot more expensive.
Absolutely. And we're seeing that, I mean, even in used vehicles and chip makers, especially like we're saying, supply chain issues. Now, here in the States, I know certain companies are hesitant to be getting into big projects here without a little bit more government support and everything as well. And that chip demand isn't going away, but how much patience do people have to wait for these vehicles? So it's
When that's a big issue too, to your point, like
yeah,
you go back to like the EV initiatives, 100,000 charging stations. Ideally, you're going to get the government funding. That was going to go to 500,000, ideally by the end of the decade. It's a carrot and the stick, right? I mean, and that's the issue, because Tesla obviously has a supercharged network. It's a huge competitive advantage. But it comes down to, like, if I'm driving from here from New York to Pittsburgh, okay, like, where am I charging my car? So that that's a big issue in terms of just, I think for a lot, I'll call like fence sitting customers. Do they go EV? Especially when they're paying 480, 490 in gas,
yep.
or but then what's the ROI, right? Like, in other words, like, the price points need to be at a point where they're affordable.
And we're seeing Tesla having increased prices too on a lot of models this past year and doing so a couple times. So finding that sweet spot where you said the ROI and that investment into EV pays off for them. It's a balance. And I did hear, I couldn't tell you the exact number, but an interesting statistic about people that bought EVs but necessarily didn't stay with them because the infrastructure isn't quite there yet for it to be as convenient for the charging and traveling as one would expect. But um, obviously, years to come, and it'll continue to be invested in, but probably still a bit off from the massive adoption phase quite yet.
When I think to that point, like the problem now is like in a risk off market, investors are not willing to look out.
Mhm.
Safety, and I think that's really like what's happened is that a year ago, it's about like, okay, like what's the total addressable market opportunity? Disruptive tech, like where could this go? We like investors, they want to just be playing these trends. And now a year later, obviously, like Fed ratcheting up rates, risk off, geopolitical concerns. Now, it's like risk profiles dramatically change. So that's
Mhm.
why, like, okay, stocks traded X times revs. Are they profitable? No, they're not going to be profitable for the next 5, 6 years. Okay, I don't want to own those. So that's why you've seen the business models in this market, almost basically category 5 storm.
Mhm.
And because they don't have valuation support. And I think that's been what's been so difficult, not just for investors, but even I think a lot of the management teams.
Absolutely. I mean, when we talk about disruptive tech, too, one of the big names that comes to mind is Kathy Wood and her whole approach to very disruptive technologies. And during COVID 2021, I mean, she was untouchable. Things were going fantastic. And she always reiterated that it's a 5-year time frame. We're looking long term for these companies. And now in the shorter term, we're seeing a lot of decline. When you're looking at some of these disruptive tech companies, is that 5-year time frame similar? Like how far out are we looking for that profitability?
Yeah, I mean, we've probably been a little more strict, I guess, in our like view. I mean, we've downgraded a ton of stocks
Mhm.
the last 6 months because look, I think you have to. It's relative to this environment.
Of course.
Profitless tech pull forward. That's why I like DocuSign, and that was one of our top names during the pandemic. And then over the last year, it's continued to downgrade that stock just because the environments change.
Mhm.
So you could look out disruptive tech. You gotta understand multiples that investors are going to pay in this market. And that's why, like for us, more and more pivoting our clients to software, to cybersecurity in terms of ways to navigate the market.
Mhm. Now, another kind of a side note, I suppose, but I did see that you mentor a lot of up and coming tech companies and such like that. I'd love to hear a bit more about that and what kind of insight it gives you to some of these up and coming companies and what's really sparking your interest there.
Yeah, and I thought, look, I mean, I spent a lot of time in the VC community, private companies. I think part of it is that, when you've been in the public markets for decades, it gives you've seen the massive success stories, but also the failures.
Sure.
And I think, especially with entrepreneurs, I think when you're building businesses, I do think it's so important to have great backers, from early and whether it's seed investing, whether it's ABC rounds. And I think that's something where I've seen so many companies that have phenomenal business models, but they just never could scale. And ultimately they either had to sell or, ultimately shut down the business. So I think it's also in this environment is trying to, just navigate. I think for a lot of these private companies, just trying to navigate this type of environment
Yeah.
because I think that continues to be the bumpy path, right? Like in other words, for public companies that have so much cash and have access to funding, okay, it's a total different situation when they're also generating significant free cash. So a lot of these companies, like they're trying to build businesses, especially disruptive tech, at a time that investors just don't have the appetite that they had 6, 9, 12, 18 months ago.